So, this week's market outlook. Over the weekend, we have had minimal developments around the situation in the Middle East, which hopefully means we won't have to flip our bias like last week on Monday, where essentially on Monday we got some news from Trump and it damaged a lot of the optimism around a potential deal, which then resulted in US oil and US yields pushing a lot higher, supporting the dollar. However, towards the end of the week, we saw yields in US oil soften. NFP on Friday came in very strong for the US, which we'll go over at 175,000, with the unemployment rate staying consistent. This obviously led to them weakening off equities and benefiting the US dollar from a hawkish Fed being the main driver of that move, of course. This week's main data point is going to be US CPI on Wednesday, which will potentially cement the hawkish Fed narrative and support the dollar to reach some new highs. So yeah, I mean, going into the calendar first, just to see the main data points this week. If we look here, so yeah, Monday we've got some data out of Japan, but it's essentially a very quiet Monday for markets. Tuesday we then is pretty quiet as well. We've got ADP, but that's kind of it. Wednesday is the big day where we have US CPI and also the Bank of Canada interest rate decision, which is a consensus rate hold at the moment, but we'll get into that in more detail. Thursday we then have the ECB rate decision and PPI, which is I believe money markets have it priced in at a 95% chance of a hike, but we'll also cover that. And then on Friday we've got GDP out of the UK, which is forecasted to slip 40 basis points, which is obviously not great for the UK. So yeah, this is essentially all the main events we're looking at this week, and let's get into the individual currencies. So starting off with the US dollar, obviously last week we saw equities take a hit from the spike in US 2s due to the NFP print on Friday, which is kind of proving how resilient the economic data in the US is at the moment. This week's CPI print is forecasted to come in at 2.9%, which is 0.1% higher than the previous reading, which will help keep the twos supported in the near term at least. With minimal developments coming out of the Middle East, we can also expect to see US oil in this range, which should also keep the dollar bid, and unless we get a major development in the Middle East, which is kind of what happened last week on Monday, as I mentioned, which was very annoying. But you've just got to adjust your flow, adjust your analysis, and yeah. Equities taking a hit on Friday should hurt the high beta currencies, which could create a nice divergence with the dollar. So I'm looking at AUD dollar, NZD dollar. Those are like two of the main. But I'm looking at EU downside as well, but we'll go over why in a bit. Institutionally, if we look at what the institutions are doing, we can see asset managers are net long, and then leveraged funds, their longs are creeping up, as you can see there. But if we look at the institutions, we can see that Bank of America are bullish on the dollar for the near term. ANZ bullish on the dollar, that's against the yen, and CIBC, they're essentially bullish. If you give it a pause, you can just read about essentially their analysis on the NFP report. And then LSEG here says dollar long steady, so basically this is more positioning, but essentially the net spec long has increased, as we can see here. So longs are building up. So yeah, that is essentially it on the dollar. Moving on to the pound. So the pound. So I mean, short end gilts in the UK are tracking US oil essentially to the pip, and with minimal signs of a deal being around the corner until otherwise, we should expect US oil to remain somewhat supported, propping up the short end in the UK. Economic data remains weak, however inflation risks are driving the market at the moment and seem to be supporting the pound on a rate differential standpoint as of now. It's also worth mentioning that the political risks are cooling in the UK. As you can see, if you go up the UK 30-year, you'll notice that we're tremendously lower than where we were around 2 weeks ago, when the whole Andy Burnham challenge thing kind of popped off. So yeah, political risks are also cooling. Equities taking a big hit on Friday, you would think would damage the pound against some more safe havens. However, this has had a minimal impact on the sterling as it's due to US rate expectations rather than market sentiment. And then institutionally, if we look at the institutions for the pound, we can see LSEG are long on the pound. We can also see that Credit Agricole are long on the pound. And who else was it? Bank of America, I believe. Yeah, so Bank of America here, basically, this is a very interesting one if you pause it. They essentially go through how AI is leading to a massive increase in foreign direct investment into the UK, which is going to support the pound in the medium term. So yeah, that is essentially where we are at on the pound. Obviously, it's kind of dependent on the cross. I'm not going to be taking GU, but maybe something like G Swiss I will be taking. So yeah, that is the pound. Moving on to the euro. So this week on Thursday, as mentioned, we have the ECB rate decision, which is at the moment a consensus rate hike. I mean, here it is, money markets have it priced in at 98.4%. So the room for a more hawkish pricing into the meeting is going to be very, very, very unlikely, which is why I think we could possibly see the euro take a bit of a hit against some other currencies like the dollar, because essentially markets are going to want to be waiting until the June meeting to price in any more hikes, see what the tone is, see if the ECB say this is a one-off hike, or if they're going to remain data dependent, etc. So I think because this hike is so priced in at the moment, we could see some cooling in the euro for sure. So yeah, due to this, I'm expecting heading into the print not much room for euro appreciation, as well as potential profit taking off the initial rate hike. So if you're going to be in any euro positions during the rate decision, I'd be very careful, because you're going to see a lot of profits being taken, as this has obviously been priced in. I mean, just surrounding Europe as a whole, data has been pretty decent, specifically PMIs last week, or 2 weeks ago, I believe. And the short end remains to hold up quite well. I think Euro AUD and Euro NZD upside makes sense, while Euro dollar downside also makes sense. Institutionally, Bank of America and Credit Agricole are bearish on the euro, while LSEG are bullish. There's a bit of a divide. And what I would say is, if you look at the 2-year rate differential between the Europe and New Zealand, it's overwhelmingly bullish, which obviously makes a good argument for upside in Euro NZD. So yeah, institutionally, Bank of America are bearish. Yep, Bank of America are bearish in the near term on Euro dollar. You can see here, Credit Agricole actually are bearish as well. They basically just explain what I just said about how this ECB 25 basis point hike is fully priced in, so there's a lot of room for a dovish tilt. And then LSEG are bullish, as you can see here. So it's definitely divided, which is kind of proves the point as how it's dependent on the cross. So like, for instance, these guys here will happily take Euro AUD longs, Euro Yen longs, but Bank of America like Euro dollar shorts. So it's all dependent on the cross. Moving on to the CAD. So with the CAD, we are bullish. I'd argue more neutral to bullish. However, the past week for Canada has been rather strong data-wise. I mean, obviously Friday's labour market data report showed a massive rebound from prior month's weakness, with the unemployment rate falling 30 basis points, and employment change and the employment change, shooting up to 90,000, which is like massive. As a result, we have seen a massive hawkish pivot in the front end of rates. This week's Bank of Canada meeting is on the Wednesday, with money markets having it at a 98.7% chance of a rate hold. So this is fully priced in as well, meaning forward guidance is going to be very key, which we think will tilt to the more hawkish side of the coin following the strong PMI and labour market data, and obviously the energy risks due to the Middle East. So yeah, we think that can definitely tilt to the more hawkish side on the Wednesday. As always, Middle East developments will be key. However, at the moment, we think US oil should stay trapped in this sort of range, which should provide support to the CAD. Institutions are pretty bearish on the CAD. However, we haven't had any insights or any new data since the labour market print. So it'll be interesting to see if any of them pivot their bearish stance to now being more neutral to bullish. We'll get that on obviously the Monday when everyone's back in the office. So yeah, that is the CAD. Moving on to the Australian dollar. So we are bearish on the Australian dollar this week. Equities have taken a hit following Friday's NFP print, prompting a strong hawkish repricing in the front end of the curve. I do expect markets to rebound from this. However, this will no doubt have a negative impact on high beta currencies in the short term. If you look at the dollar against the Chinese yuan, it's having a decent pullback, which is following the print, which is going to contribute to near-term antipody and weakness as well, obviously, because they're China proxies. And then the Aussie 2-year is actually rebounding off the, I can't remember what level it is, 3.5 potentially, or 4.5, I can't remember. However, that seems to be the theme among the majority of GA at the moment, and with its most recent data being on the softer side, I think we can expect the AED to remain neutral to bearish in the week ahead. I'd only be buying Australian dollars against the New Zealand dollar this week, and I'd be shorting against other currencies like euro, as we've mentioned, and we'll go over in the technicals. Institutions are still overwhelmingly bullish on the AED, which signifies, at least in the medium term, that the AED should regain some strength. So definitely for your longer term positions, like GA, EA, downside makes a lot of sense, but you need to be mindful that this is the medium term, so a very big stop for sure, or a much delayed entry. So yeah, that's the Australian dollar for this week. New Zealand dollar, well, we are bearish on the New Zealand dollar, similar to the Australian dollar. Essentially, the New Zealand short end is getting absolutely battered, which is driving rate differentials lower on the majority of G8 crosses. Then, once you couple in the fact that US oil is elevated and it makes the New Zealand dollar an unattractive buy at the moment, even with a more hawkish RBNZ, equities taking a big hit and the Chinese yuan having a slight pullback, this is going to hurt Chinese proxy currencies in the near term, as mentioned. So yeah, I mean, institutionally, I believe JP Morgan are bullish on AUD NZD. Yeah, as you can see here. And we agree with that, but otherwise we're kind of wanting to short the New Zealand dollar against something like the US dollar, something against the pound, the euro. There's a lot of good crosses for sure. Looking at the yen, I mean, we'll keep it simple, quick and simple, because not much has really changed. But essentially, the macro points are downside, but we are so close to the 160 handle, which is definitely risky if you're going to start playing yen weakness, because intervention could come in like that any minute. I mean, if you even look at CAD yen, dollar yen, the chart is so manipulated. So lower time frame stuff I'd stay away from. But yeah, that is essentially it with the yen. I mean, they've got the June meeting is 98% for a hike, and I believe this has been priced in. So there's also room for downside there as we get more data and move closer to the meeting. So yeah, that's essentially the yen. Then moving on to the Swiss. So the Swiss franc. We are bearish on the Swiss franc this week. I mean, short end yields among G8 continue to drift higher amid little signs of Middle East optimism. This, coupled with Friday's very strong NFP print, has not worked in lower yielding currencies or assets' favours. We expect more of this to come this week unless we get a major development out of the Middle East, supporting an unwinding in yields and benefiting the Swiss franc via gold. However, that is not the base case. Institutionally, if we look here, I believe JP Morgan are bearish on the Swiss franc, and Credit Agricole are also bearish on the Swiss franc. So we've got a good bit of institutional backing there as well. And obviously COT data, I believe, is signalling downside, if I'm not mistaken. Yeah, so leverage funds and asset managers are net bearish on the Swiss franc for now. So yeah, this is essentially the macro outlook for the week ahead. Now let's get into the technicals. So starting with the US dollar, I think if we do come down to this level here, the 99.5, I'll be more than happy to take some longs. However, what I think is going to happen is we're going to come down, probably create some structure here, and then bounce from that. Euro dollar, similar thesis. Obviously, it's kind of an inverse of the DXY, so looking for either this level here or some structure to be built. Same as Euro CAD. Euro AUD, I really like this level here. I believe it's the 16312. 125, call it, just above the 163, and I think this level is perfect for long positions. Euro NZD, this was a nice position last week. I think this level here has more. It has a very good likelihood of bouncing, especially it being the 1.98. So there's going to be some orders there for sure. Oh, if I just type this in, there we go. Euro Swiss, I think. Upside definitely makes sense. I think off the open, we're not going to get in here unless London session, we rip up and then we come back down and retrace. However, if we gap down, I think these two levels are really nice. 0.915 for sure. Euro yen, you need to be careful with the yen because it caught massive strength on the Friday, which, to be honest, I'm not 100% sure why. I'll have to look into that. But I think this level down here makes a lot of sense. I mean, there's a lot of manipulation in the yen as well, as mentioned, so it's not my go-to. Dollar yen, this level's been holding up very nicely. Dollar Swiss, essentially the same as the DXY. Dollar CAD, this level looks really, really nice. And I think we could potentially move down here, considering Canada's labour market data was very strong on the Friday as well. NZD dollar, I think any pullback to make some structure of its own would be nice. NZD CAD, similar thesis. GN, similar thesis. There's just not a lot of structure to work with because it's been such an aggressive run the last week at least. GJ, I wouldn't get in at this level off the open. I'd probably be looking for the 212.8. G-Swiss, these two levels I've got marked out here. GA, upside here. CAD Swiss, I'm going to want to see some structure be built, or I'll happily get in at the 5705 if we get a bit more of an upside move there. AUD dollar, similar thesis, going to need to wait for more structure to be made. AUD NZD, I really like this level here. This level looks perfect for long positions. Something like this. AUD CAD, I like a bounce here. The 9875, yeah. And that's it. ES, I think we could get a nice bounce here, because I do expect this print to be faded, for sure. So yeah, now 7275. That seems like a decent level. So yeah, that is essentially what I'm looking at this week. Gold, I still think there's room for downside. I think these levels look very nice. But yeah, that is essentially it for this week. As always, there'll be a discount code in the description of the video, and I'll catch you in the next Outlook.